Thank you so much for being here. We have some of my favorite ladies here. We have Amy Maddox and Jennifer Goodwill from Allstate, and also my very best friend in the world, Melanie from Fairway Mortgage. And I'm Laura Ivy Blessing with the Blessed Life Group, Keller Williams. And we are here to talk about insurance rates and rising mortgage payments and all those good things. I don't know if you were like me, but I got my escrow analysis statement and I saw my property taxes went up, my insurance rates went up, and I was like, oh my gosh, I'm like getting it from all angles here. The price of eggs is up, everything is up. And
Yes.
it was just super frustrating. And I was like, what can I do about it? And that's when I called my good friends here to help. And this idea came from that. So we can get started. So what do you do when somebody calls you? Let's start with Amy or Jennifer. And they're like, my rates went up. I didn't make a claim. What is going on here? What is happening with insurance right now?
Yes. And that is the number one call we talk to customers all day about. And they do feel frustrated because they didn't file a claim, yet their rate is going up 30, 40, 50%. So these are the things that are a factor right now. It's a combination of many things: inflation, rising costs of materials, the cost to the actual repair itself, whether it's a home or a car. On the auto side, we have more drivers in Texas than we've ever had. So more cars on the road cause more accidents. Cars are more expensive than they've ever been, killing insurance rates because their repairs are so expensive. A lot of environmental factors that we've never seen causing more natural disasters. When you look at it, it's home and auto equally. I wouldn't say one's rising more than the other. It's both together are rising. It's like the perfect storm. If we go back and say in 2025, it's definitely just a perfect storm for what's happening right now.
Gotcha. And you're with Allstate.
Yeah.
So I have my insurance with USA. So what should I do if I'm not with Allstate and I want to figure out if I have the best rate or the best coverage, or if I wanted to shop for insurance? What should I do? Because I tried one of those sites and now I'm getting like a million calls from a single agent out there and they're stalking me and it's scary. So,
Because insurance companies buy leads. So when you go out and apply for one quote, then that it's sold to all these lead generators. So that's why you're just inundated with emails and calls and text. It's a problem because customers, I might quote a customer and he's already gotten 5 Allstate quotes because I don't buy leads. My agency does not. We're completely referral only, but other agents, that's how they write their business. So once you plug in anything online, sold, that data is sold and it becomes a lead for any insurance company that's buying leads per se. That's an important thing to talk about. But I would just call your current insurance company. Start there. In your case, USAA, and just say, I want to have a review. I want to review where I'm at now, my current coverages, and also options to help lower the rate. And the bulk of the cost, especially with homeowners insurance, is on the dwelling coverage, which is to rebuild the home, and then the deductible amounts. When you change coverages like liability or personal property for contents, that doesn't change the rate, but just a few dollars for the year. So it's really looking at where the dwelling coverage is and what deductible options that they have, because most of the time it's going to be increasing the deductible, finding a balance of going higher on that deductible, but still that you're comfortable coming out of pocket with if you have to file a claim. You don't want to go so high that it could really cause a problem if you have to file a claim. I would say explore bundling. That's the big thing with insurance. We were already going to touch on that as a way to save all the policies. Have that company quote everything together because you get really big discounts for that. So I would say have them do that review for you
look at those coverages and see what options you have, and also explore the bundling to help bring costs down.
I don't ever want to take someone away if they're happy with their current insurance provider, but you should still get another quote from someone else to compare. Because just like we usually don't buy the first car we look at, we like to see what else is out there. Insurance is the same. So I don't want my customers to shop, but they do. And that's the nature of the business. And so what we do is keep them happy with us, but you should always know what else is happening out there and what rates look compared to at least one other company. That's what I would suggest.
I was like, is there a good way to compare apples to apples with the coverage that you're getting? Is there a rating system for insurance companies? Can we give you stars somewhere? Figure out.
The Texas Department of Insurance used to, and probably still does, have some form through it's the Office of Public Insurance Counsel. It's OPEC site, which I'll share that with you and you can share with people. And you can create a spreadsheet. So it will compare USAA, Allstate, Farmers as best as it can. It doesn't know all the ins and outs of the policy because some of that is confidential business property that can't be shared. But this OPEC website has been around for 20 years and it is helpful to create a comparison. I'll share that site with you because that is helpful. If you know an insurance agent, like a person, not a USAA or a Geico or Progressive, but you actually know an individual, we sit down and go over the differences all the time. Sometimes it's easier when you're just talking to a person, pointing out differences. That's a big key. But that OPEC website is helpful to see, oh, this policy has water backup, this policy does not. And then at least you could go back and say, Amy, can you add water backup? And yes, I can, but it might not show on that site. We're all similar, honestly, but there are some differences here and there.
And I would say don't get 10 different quotes.
It's too overwhelming.
It's just too much. I would say 3 solid local companies, get referrals from friends, family that have dealt with those companies before, and have someone local that you can text or email with, because it'll take a little bit of time, but with only, say, 2 or 3 companies that you're comparing, you're going to get a better quality comparison and review. And you can actually email your current declarations page over to someone. That's what we do all the time. We'll have people email over and say, this is what I have now. Like, how do you compare? And so that would be my suggestion too. Just narrow it down and don't get overwhelmed with the volume of quotes that you're getting.
Yes, that's good advice.
Now, you ladies shared something with me recently that I didn't know. Because first of all, I was surprised my rate went up even though I had made a claim. That was confusing to me. And then you said something like, if you make a claim, it's definitely going to go up now. That's how it is pretty much with all of them.
So every company is different, but so I can only speak for Allstate. If it's a weather claim, meaning hail, wind, tornado, lightning, those claims do not affect the customer's rate because they're acts of God. There's no way that the customer could have done anything about it. But if you file a claim for fire, theft, vandalism, liability, those type of claims, you'll see about a 40% rate increase on top of whatever else we're increasing. So if you had a non-weather claim, if you were an Allstate customer right now and you had a non-weather claim and we had our normal rate fluctuations, someone could see 50, 60% in one renewal cycle. So it really boils down in that case, having a local agent that you can call and say, this is what's going on. And we talk through, okay, how much damage is there? Because we also have to keep the deductible in mind. And if the deductible is higher, if we've increased the deductible to help bring the cost down, those damages might not actually exceed, or even if they do,
not by much, the deductible, and you might not decide to file the claim anyway. In this day and age, it's just important. And it's one of those things with insurance, you have it so that it's there when you need it. But you also want to be careful about filing the claim as well, because it's all about the risk, and the higher risk type claims will lead to some higher rates there. And the other important piece to that is, with all the rising costs, it's two parts. It's increased costs, but also qualifying for a new policy. So when you go to shop around, the companies are pulling your prior claims history. And even if it's a new purchase, most companies like Allstate, they're not actually looking at the claims on the house you're buying. They're looking at your prior claims history. So if you're buying a new primary residence, we're going to be looking 5 years at the primary residence claims you have filed, even if it's on different properties. And the number of claims that you have in the past 5 years can affect you even qualifying for a new policy. And guidelines are tightening up. It's rate increases and increased guidelines, underwriting to qualify for a new policy. So,
And you told me something I didn't know, like how important it is to have a local person to call. If you call the 1-800 number for the company, they just mark it as a claim. Is that true?
Yes. Regardless, if you just preface it by saying, I don't want to file a claim, I just want to ask a question, they're going to code it as a claim. Nothing might ever be paid. It might show up as a zero claim, but it's still going to be on the record.
and when you go to shop, that zero paid claim is still in your history. It cannot be removed, and it'll still count towards your eligibility.
Did you guys know this? Did y'all know that? I did not.
I found that out last time I was shopping. Real surprise. I said, how can
Different.
you hold that against me? I had nothing to do with it.
Wow.
Yeah.
It seemed evil to me.
And then they blame the state of Texas, not in the case of the homes here. I don't know if that's true or not, but they tell me the agency controls what they can and cannot do.
Yeah, we have no control. But the thing is that every insurance company sets their own rates, but their rates have to be approved by the Texas Department of Insurance. If we file for a 40% increase, that we provide financials. The Texas Department of Insurance says, yes, they've lost so much money or they're paying out so much. So everything is approved through the Texas Department of Insurance. But I think there's some legislation coming that's saying there has to be a cap. Like, we've got to reach a point where the profitability is still there, but the company isn't. So there has to be an end in sight, because it's going to make homeownership unaffordable at some point, unless interest rates go down and that helps balance it. But there's got to be some relief
Yeah.
sometime.
And yeah, that's what we're all looking at. What's going to happen? I wish I had a crystal ball. What do we do?
One comment, if I may.
I'm sorry.
I'll say one comment, if I may. The scenario you talked about, I had a policy double in premium from year to year. So I called my agent and I said, hey, what's up here? No claims, no problems. I've been paying on time. I have great credit. And you're doubling. What's that? The only choice I had was to change the deductible
Yeah.
in order to get my premium down at an affordable rate. Otherwise, I would not be able to buy the insurance. It's getting real close, like you said.
It is really hard.
Unfortunately, we're not out of the woods because of all the losses that have occurred these past 2 years. The industry, and I'm in the life side, not in the property and casualty side, is going to suffer some tremendous losses
Yes.
that are now compiling that have occurred over the last 2 years. So if you've seen a doubling of premium, probably see another doubling of premium in
He's
26.
right. He's right.
Earned yourselves.
Yeah.
I think we saw a 40 or 50% increase and had no claims, and every home on my street, and I would say about 80% in my neighborhood, all filed for new roof last year from hail damage, and we were denied 3 times all the way to the top with several roofers, and they refused. We had visible hail damage and our insurance would not pay it. Meanwhile, neighbors on every side of me are getting them approved, and we still went up over 40%. A roof that's probably getting to the point where it's too old to even file the claim for hail damage, even if I was to get it approved, because now I'm at 12 years. They're just delaying it where you get to a certain point in the age of roof and it won't matter if there's hail damage or not, even if I get a new storm tomorrow.
It's really hard. And I will say, I keep going back to the agent, and I'm going to use Laura's example with USAA. So when Laura is denied her roof claim, she doesn't really have anyone to go to at USAA. You can ask to speak to management. You can write an email to the president of USAA, but it really goes upon deaf ears because USAA, Progressive, Geico, they're all just running. It's just a numbers game. They're just getting people in and out with claims. The beauty of having, whether it's us with Allstate, Farmers, State Farm, having a local person is that, especially me being with the business, with the company 21 years, I know who to go to within the claims department. I know his name. I know him personally. He's been in my office, and I'm like, Mark, common sense. Let's look at this roof together. And he overturns them all the time for me. But it takes years of experience. It takes someone knowing what to do, what pictures to look at. It really matters who you're with and what your agent knows versus Laura would have really no control in a USAA world. So that's where it's going to boil down to, will insurance agents ever be replaced by online business? I would say not in my lifetime or in my career in the next 15 years, because I still think we play a valuable role in helping the consumer when they need it. So that's just something to think about. It's not always about the price. The lowest price out there is not always the most important piece of this puzzle.
So touching in on that, Amy is my personal agent. And I, for the first time in my life, had to file a homeowner's insurance claim in, what was that? The snowpocalypse. And my house flooded. And there was water streaming through the ceiling and running down the stairs. And I was having a meltdown because it was freezing outside. The sidewalk was iced over, and I'm freaking out. And I call Amy on her cell phone. And she answers and she tells me exactly what to do. She also had empathy and cared about me personally and checked on me the days after. And the fact that I had direct access to you made a huge difference, right? And there were a lot of claims after that storm, but we got our claim in really fast and our coverage was amazing. We had our housing paid for and it kicked in right away. And I know that calling the 1-800 number wouldn't have given me the same outcome. How long have you insured me? 18 years?
Yeah. We don't open. Yeah.
A long time.
Mm-hmm.
And that's when people come to me on the mortgage side and ask me about insurance. I say the same thing. You could go to an internet insurance company and probably get cheaper insurance, but I always say there's nothing better than someone local, someone accessible, and someone who cares about you and knows you. And for me, having gone through it personally, even if I could get it cheaper insurance, I don't really care. I'd rather pay more to have access to my person and know that I know them and they know me, and it's a personal relationship, which as a loan officer, I go through the same thing. People shopping internet lenders. And yes, you can find something cheaper, but you get what you pay for. Just like real estate agents. There's real estate agents who will be like, list your house for 1%, whatever. But are they going to get the same service? Are they going to get the same experience? Are they going to get the same result? No, they're not. And I think the more we can educate people on this, the better, because there's so much misinformation and people can get so overwhelmed. And I'm guessing that y'all have the same thing as ours, the trigger leads.
Yeah.
Yeah. Okay. So if I pull someone's credit, they immediately get 500 phone calls.
And they're all overwhelmed. They're just like, oh my God. And they think, some of them think we sold their information. I'm like,
Yeah.
the credit bureaus are selling your information. And but that internet lender, when your escrows go up, when your payment goes up, they probably don't even work there anymore. They don't know how to help you.
No.
But when my people's payments go up, like I will sit with them and I'll look at the numbers and I'll help them figure out, okay, we need to, let's see if we can find cheaper insurance. Let's do this.
Yeah.
And we can problem solve. And they get to talk to me, a person, right?
Yeah.
Not a call center. And I think I understand everybody's trying to save money. I totally do. Just like interest rates are high. They just are. It doesn't matter what lender you go to. Interest rates suck. They just do. And I'm on top of it. And I'm trying to just educate people on what's going on now and what I believe is going to happen in the future, which of course none of us know. But just the accessibility, I think, is huge.
Thank you. I appreciate that. Thank you.
Let's keep that trend going with all the AI auto be calling all of us. Talking to a person is important. I'm glad you taught me that. I did not know that. I knew that claims followed you even when you bought a house, which I think is gnarly because you moved out of that house for a reason because it was
Oh, right. You think it should be the
a money
opposite to
pit.
care about the house that you're buying.
Keep something in mind that we are all in a relationship business.
Yeah.
And to develop a relationship, there has to be trust. Trust the fact that they're going to take care of you. Just like I trust Mel that she's going to take care of us. Now, we're in San Antonio, so we do all our business because we trust her. And the same applies to whether you're selling property and casualty, retirement plans, whatever. It's the relationship. If you're able to develop that, the trust will be there and you'll get a lot of business taking care of your clients.
Yes.
Yeah.
That's what we all try to do.
That's
Yeah.
true.
That's right.
Thank
So
you.
property and casualty sucks.
It's
Yeah.
fun right now. That's for sure. But
Well,
the best experience with a title, we laugh, we try to make people relax. Yeah, we try.
that's awesome. Thank you for this. Are there other options? So I've heard compare and shop, and you can lower your deductible. line of defense for
raise
raise or
raise your deductible.
What
Mhm.
if you don't want to do those things? What are the other options? Melanie, with on the lending side, is there anything you can do if your cash flow, if that just really taps you out when these rates go up? What can you do?
Yeah, every year, if you're in Texas, obviously, you're going to get an escrow analysis. It typically comes out in February, early March. And that's because that's after your properties have been paid and they reanalyze your escrow account to be like, okay, do we have enough in here? Do we not? Usually, even insurance does go up year over year, but usually a lot. If you look back, it's usually property tax that's contributing to the increase. And so I can usually be like, okay, here's what happened. Maybe let's protest your property value or whatever. But this insurance thing's new, right? The significant increases. I had a lady whose insurance went from $1,800 a year to $6,800 a year. That immediately made her payment unaffordable, right? There's not much I can do besides say, hey, you need to shop your insurance. And come to find out, the reason hers is so high is that there's not a fire station within 5 miles of her house. And I was like, okay, to a certain extent, I get that, but it doesn't seem like
That's really
$5,000.
yeah.
And so, when I'm talking to people about their payments going up, it's historically been mostly about property tax. Now it's becoming more about insurance, which the same thing applies though. If you have a shortage, there's options for you, right? If the shortage is X number of dollars, you can pay the shortage, but your payment going forward is still going up because taxes or insurance or whatever are going up.
Right.
So it may, or like you can spread out the shortage over 12 months or 24 months or whatever. Like that's an option typically. The hard part is we have no control over property taxes unless you're protesting every year and you win.
Doesn't mean you're going to.
And then obviously insurance, which hasn't historically been a big part of these increases. And so I'm doing calls with clients every single day, trying to get creative on what can we do, especially people who are already sitting on a high interest rate. If you bought or refinanced in the last, 3 years roughly, like you're already at a high interest rate. It's already rough. We've all been thinking rates are going to come down for however long it's been. I stopped counting. But with with no real end in sight of when rates are going to come down, the only things we have to manipulate are taxes and insurance. I'm doing a lot of, okay, let's look at your insurance. Let's see what we can do. Let's call the servicer and see if they'll work with you. Maybe you pay some of the shortage out of pocket and then spread the rest out over 12 months or 24 months. It's still a cost, right? And in most cases, there's an increase no matter what, whether you pay the shortage out of pocket or not, because going forward, it's going to be higher. So I have total empathy for everyone going through this. This affects people's livelihood. The people I was talking about, their mortgage payment went up $500 a month. Usually they're looking at $50-$60 a year. Their payment goes up because their insurance went up a little, taxes went up a little, or whatever. But when it's $500 a month, that's so impactful. And as a mortgage person, I can only give advice. I'm not an insurance agent. I don't work for the county. I can't control your property taxes. I can only help you develop a strategy for what do you do going forward? How do we deal with this? What are your options? That's why this is so important to educate people on what to do. And
The statements just came out, Melanie. We just received them. Mine went up a few $100s. Would this be a good time to start comparing the different insurance companies?
bit on that.
I also do have an agent local, even in my neighborhood, that I've been working with for
That's
don't know,
good.
probably 12 years. But like I said, we had this huge issue last year, no help. My rates went up and now my escrow has a shortage and our payment is going up. I think
Yes.
$325, something like that. Is this the time now? And
Yeah.
if I am able to secure a lower rate, does that affect my shortage?
Yes.
That just moves forward.
That's a great question. Yes, it does. You can ask for a new escrow analysis. So if you change insurance, you can absolutely reach out and ask for a revised escrow analysis, both if your insurance is going down and also if you protest your value and you win.
Yeah.
Then we can run a tax estimator. Williamson County and Travis County both have tax estimators where we can send something to the servicer and be like, hey, here's what the projected taxes are. Can you reanalyze the escrow? And they
Second part real quick to that question was for Amy again. Are there things in our policies that you don't want to do like the major stuff, but are there minor parts of the policy?
It's when people get their analysis and there's an escrow shortage, it's time to shop then. Because if they can save insurance money, right, then that will affect their payment going forward. So don't wait the time to do it then so that you can dig in later. So that's first thing. Second thing, in the state of Texas, you can't eliminate separate structures. Even if you don't have a cabana or a shed or anything in your backyard that's not attached to your house, everybody just has separate structures. It's just part of the policy. So you can't remove it. So we get people call and they're so excited. They're like, I want to remove this and that, and you can't. It's just part of the standard policy. And even if you could, it's just a couple dollars. But at the end of the day, I might save someone $50 a year by removing some of that because the bulk is in the coverage. And we in Austin and surrounding areas, we have to have that higher rebuild cost because prices are so high for rebuild right now. You've never lowered someone's coverage because it's never the coverage for rebuild is continuing to go up. So
Fair enough. I appreciate that. Thank you.
Are there things you can do to your house to help lower the rate?
yeah. Biggest thing is a roof age. 0, brand new to say 7 years is going to be the best rate. And this is for realtors too.
Everyone's, oh, it's a 30-year shingle roof. No roof in Texas lasts 30 years, ever. It just doesn't. The biggest thing is the roof age. And if the buyers and sellers can't agree, that could come up. Let's say the roof is 15 years old and the buyer is, no, I still want the house. I'm going to move forward. They close on the house. We write their insurance. That's the day we write the policy. That's when the inspection is triggered. So we might not get the results on the roof inspection until after they own the home. Talk about difficult then, because we rarely have any that come back, maybe 1 out of 5,000. Really, that's that few that we say you have to put a new roof after you just closed on your brand new house and you're like, what do I do? So in that case, you definitely would shop around and find a company that doesn't do an inspection, which is very challenging. I don't even know if that exists. It doesn't exist.
Yeah, there aren't any that will do an inspection when the home is under contract that I've found.
We used to, but that changed because they were spending too much money. All the insurance companies were spending too much money doing inspections before we actually got money on the policy. And then we just did all that work for free. Not me, but the insurance companies. So now we don't send an inspector until we bind the policy for closing. So that's a horrible situation. A few of our come back that have granular loss in one area. So we'll have the roofer come out, fix that one area, send pictures to our underwriter, and 10 times out of 10, Jennifer gets it approved and we have no issues. But that's a very touchy, scary deal. So the older roofs are kind of a scare right now.
And not to throw one more thing in there, but a lot of companies are doing a roof payment schedule. So you need to be aware of your own homeowner's policy. What is your roof coverage? Because with Allstate, we don't go to a payment schedule until the roof is 16 years old. A lot of companies, from day one when they write the policy, you're on a roof payment schedule, meaning you're going to get paid a certain percentage based on how old the roof is. So that's important to know, because if you go to a wind or hail claim and instead of getting 100% of whatever the estimate is, maybe you're only getting 80%, that's still a big chunk that you've got to come out of pocket in addition to your deductible. So that's another question you need to ask is, what is my roof coverage? And when you get new quotes, what is your roof coverage? That's important.
But for realtors, I would say that's where when you're showing property that your buyer needs to understand, an older roof can have that we've got to figure out which company will insure it. That's a really, and Laura has the experience, so I know you do that. But these new agents in the business, they're just leading their buyers because they want to close on a house so bad, and they're not advising properly.
Now I get to add to my checklist when we represent a buyer, we have the seller call the insurance company to come look at the roof, because then I know at least one insurance company will insure it. Oh,
Yeah.
didn't we cover here? Does anyone else have any other questions?
Does the type of roof make a difference on the coverage?
Good question.
So metal versus shingle. So metal is going to make the replacement cost of the home more just because it's more expensive. However, it offsets because the rate is less with a metal roof because the risk is less. So with Allstate, I can only speak for Allstate, our roof payment schedule for a metal roof doesn't start until age 21, whereas with a shingle roof, it starts at age 16. So the rates are typically less to insure with a metal roof, and you get longer full replacement cost on a metal roof.
The insurance companies do not cover cosmetic damage to a metal roof. So that is important when people are looking at houses. If they love a metal roof, I love them too. I did not end up putting one on my house because I knew if I saw little hail dings, that would drive me crazy. So we do not cover cosmetic dings on a metal roof, only if the seam is damaged. the seam is hit and breaks it open or breaks the seal, then that's when we will cover it.
What about other types of roofs? Like I have properties in Arizona and another state.
Tile is also, well, for us in Texas, it's 21 years on the
Mhm.
tile as well. And it's more durable, which is very unfair because a tile roof will last forever. Crystal Falls and Leander, there's lots of tile roofs there that are 25 years old and they look beautiful, brand new. We would not offer full replacement cost on those roofs. And I think that's not right. But that's the guidelines right now. But in Arizona could be different.
Yeah,
Every state different state.
Mhm.
I've been hearing, and Lauren works with more buyers than I do at this time, like trees being near the property have been affecting insurance, getting an insurance quote or policy. Is that true?
Yeah, they'll
Yeah.
be steered back if they're over the structure, certainly if they're touching the structure. But it really depends on, like Melanie's old house where we had these insane heritage oaks covering her whole.
Right next to it.
Yeah, that's a little different than just needing some limbs trimmed back or
That was like roots growing under the foundation.
yeah. It depends.
That was
There's also brush fire areas. There's some companies right now that aren't riding in some parts of Austin because of the brush fire risk if it's too like heavily wooded.
Like Leander, Crystal Falls and Leander, I keep talking about that. They have homes 1 million to 5 million in there, and USAA and some others won't insure back into Crystal Falls deep into the neighborhood because of brush fire. So it's just strange. And I think fire is going to become more of an issue after what happened in California. I think that we're still going to see some changes but that will take some time. But another thing is that we know Texas, being the largest insurance state in the U.S., Texas is going to subsidize what happened in California.
Yeah.
We're going to pay more here in Texas because of what happened in California. So Texas carries the profitability for the entire state for every large insurance company. If Texas were to close their doors, then insurance companies would not be profitable. It is a proven fact. I've sat on boards. I've looked at numbers. So Texas is going to stay in the market, but to be profitable, they're going to spread their profits and raise rates when we have those natural disasters in Florida, in California. It's challenging.
And I'm sure our freezes here helped as well. And we have
and the hurricanes that got Houston and Galveston and Rockford.
Yes. Those the hailstorms in Dallas DFW are billions and billions of dollars of hail damage in every year. So they already put money aside to prepare for those hailstorms in DFW, but always exceed what they put aside. So that's another huge cost. So
We are at the end of our time. I love learning about this because it helps me service my clients better and myself. I'm just curious for myself as a homeowner. And I hope this information is helpful for anyone that watches. We're going to post it on social media. We're going to do a seminar on capital gains on March 25th on how to maybe avoid paying them or what you can do. If you have, that is good. The median age buyer is like 56 now. So a lot of these people are sitting in their homes because they don't want to pay capital gains. They have a lot of equity. So let's figure out what to do about it.
yeah.
People don't know that there's exemptions from capital gains. Like the biggest risk of capital gains is on a second home or an investment property. You get a little break on a primary residence, but this is a great topic. We could also talk about 1031 exchange for anyone who's worried about capital gains on an investment property. Because if you put those funds into another property, you avoid capital gains. So I do think we should probably like bring in a CPA to on that one. I feel like all those things at once.
You're
Intelligently answers all that.
Yeah. Then join us for that one too. And then April 24th, we're going to do our protest your property taxes seminar. So we were just lining these up we'll have the recordings out. I'll get it out tomorrow. Thank you again, Amy, Jennifer,
Thank you.
and all of our many guests that are here. You guys rock. We appreciate you. And reach out if you have further questions, and I'll send the recording tomorrow.
Thank